One of the biggest mistakes I see smart money traders make, and I did this for years, is thinking a wick through a level means the structure is broken, but it's not. That wick traps you, price reverses, and your whole trade setup falls apart. What you actually need is a body close through the level, and I'll show you why on the chart right now. Look at this example. Right here, we get a wick through the level, but no close. Traders see this and think, that's my break of structure, time to enter, but price just reverses, and that's the trap. This one mistake cost me so many trades, but once I fixed it, everything about structure finally clicked. If you understand structure but still feel stuck when it's time to actually place trades, this is where everything clicks. You'll finally fix the missing half of your trading system, the part that turns smart money setups into real, confident trades. No more hesitation, no more late entries. Once you see this, your charts will never look the same again. Hit the link in the description to get started. This is where confident execution begins. Let me show you exactly how to avoid that trap going forward and what a rail breaker structure looks like. So you've seen exactly why you should be looking at these breaks in a different way. Let's just go through what a break should be looking like for you on the charts and what you should not be looking for. Now to start with, let's look at those wick breaks where we see price here, okay, pushing through this high. Now that's the trap. Look how the market pushes all the way up here, and then we push all the way back down to close below that previous high. And you can see we're already started to pull off. This is live price action. This isn't something I'm just showing you back in time. This is current price right now on the Euro USD on a 4-hour time frame. Once you understand these traps in the market, you can start to see why price does what it does. So what we're likely to see here to start with is price going to want to run for this low. We've got nothing here to stop price. We've pushed up, we've pushed back down, and now it's running for the next area of liquidity. Now that area of liquidity is going to sit below right here, this low in the market. That's your first area of liquidity price will need to run. So what about when it comes to actually looking for the valid break? What are we going to change in your trading? What you need to be looking for instead is when you see a break like this and you see a solid candle through the level. That validates the break of structure. And we can mark this off as a break of structure. Let's just put this in to this box. Actually, let's have it as capitals. So when you see this break of structure, this is key because now you have a valid trend in the market, which is bullish. And if you understand your areas of supply and demand, okay, we will have an area of demand we expect price to pull back into, or we pull back into this bullish imbalance candle. And we continue to run the week high. But the second time we pushed up here, you've noticed that the market didn't close through. So that's where you need to change things. Let's just zoom back out and have a look at previous price. Again, we can start to notice even this movement here to the upside. Let's have a look at what happened here. If we mark off this high, did we break out here? No, we didn't. We wicked out. It brought in those breakout traders, faked you out, and then pushed back into this bullish imbalance candle. Now the real break comes when you see this candle here break into the upside. Now again, what that leaves you is an area here I can mark out of potential demand, where you're looking for price to pull back into to then capture your entry to run to next high. Now again, we can look at where price continues up here, another fake break to the upside. Now this time we didn't follow through, continue to the downside. It was just a short-term fake out. And if you're looking to take buys on the breakouts, that's not what you want to be doing. You want to be waiting for that body candle close. And as soon as we get the body candle close, we can see the continuation. Same here. Once we get the body candle close, you see the continuation with price. And if we go back even further in time, let's look at this low here. Again, we have a wick through, no follow through. Then eventually we get a break to the downside. Again, if we mark off this one, this time it's a valid break to downside. Then price pulls back and continues lower. And that's what you're looking for. You're not looking for those fake wicks. Let's see if we can find another quick example. In fact, let me go to a 15-minute time frame. So you can see this works on all time frames. Let's go to current price. Let's remove everything off the chart. And again, we're looking to see where price breaks. So let's have a look at this high. What do we see? A valid break, a retest, continuation. That's what you're looking for. You're looking for that valid break. I'm just looking to see if we can find that wick break. So here, if you're seeing this here, now this isn't really a valid area I'll be looking at, but it's a good example to show you where the market's going to fake you out. So we push to this level, a big push through. Let's mark off this high. So we have a nice wick through to the upside. We close back below, and the market is then running for this low. Now we see that valid break of structure, which gives us the bearish buy. So all the market's doing here is sweeping above this high to grab that liquidity. And that's where if you're jumping in above the breakout, you're going to be in the losing position. And actually here was a good opportunity to just sell the market. After this, we have another pullback. And again, what do we get? We get a big push down on that wick. Now that straight away is telling me that this market is potentially going to run higher. We do get a valid breakout here. But after we look at this, what actually happens? The wick never gets closed back through. We do close through as a valid breakout. Now, when I see these sort of wicks like this, I can mark off this wick for you. I want to see the 50% being run. In fact, let me grab this tool, it'll show it better. This is something extra you're getting in this video. Unless we see a close through the 50% of a wick like this, then we're not going to continue lower. You can see the market wicks through the 50%, closes back up. Yes, we have a valid break of structure, but is it a valid continuation pattern? No. So once I see this candle closing back bullish, that signals to me we will go higher. And then we're going to run for the previous high up here. And again, we get the breakout. That's what you're looking for. And then you see the continuation of price. So look at these on your charts and make sure you're not getting caught out and you're not looking to take breakout trades with candles like this. They are going to get you into that trap in the market, and that is not what you want. Before we wrap up, if you're tired of second guessing trades or stuck wondering why structure still isn't working, this is your turning point. There's a proven path where smart money structure becomes second nature and consistent profits stop feeling random. That's what Danny found after nearly $300,000 in losses. He didn't just learn structure, he mastered it and rebuilt his confidence from the ground up. If you're ready for that kind of shift, your next step is simple. Click the link in the description to secure your priority pass and start mastering smart money structure today. Now, if you want to start bringing all this together and start learning to understand how you can apply a 2 time frame approach with this type of break of structure in the market, then check out this video coming up next. It's going to help you to understand the use of 2 time frames.